Now, for more on China's trade situation, I'm joined by current affairs commentator Einar Tangen, live from Beijing. So, Einar, what stood out the most to you from these latest trade figures?
Well, basically, it's a defeat for the China bears. Everyone was expecting lower than expected, and it came in better than expected. So at this point, people are trying to figure out exactly what that means. One quarter does not make a complete trend, but things are looking very up. Of course, everyone will be looking to Monday's report.
And how much did the Lunar New Year holiday factor into some of this latest data?
Well, it's a year-on-year type of situation. When you start looking at the first quarter, you're getting a very good idea. I mean, there is always some distortion due to that, but the timing is always included in the first quarter. So I'm going to discount this idea that you shouldn't be looking at that. On Monday's figures, you'll get a very good idea of where things are going. Especially in growth. I mean, the important parts of this aren't necessarily the import-export, but internally, you see a real uptick in the private investment. This is something that's been going on for 2 months. Let's see if it happens for 3. If it does, it signals a strong rebound in the Chinese economy.
And looking internally, let's also look at the role of consumer domestic demand. How do you see that faring?
Well, it's a question of numbers. Well, we'll see on Monday. The expectations are that it's going to come in, that consumer disposable income will go up and that the retail sales will go up. If it doesn't, there's real problems there because you have, over 60, almost 65% of last year's GDP increase was due to consumption. So there's a strong reliance on those particular set of numbers. As I said, everything looks good. We'll see on Monday.
Now, obviously, China-US trade always tends to be a hot topic. What are some of the key takeaways from that dynamic?
Well, there is an uptick in the amount of imports coming in from the U.S. Remember, China is the U.S.'s 3rd largest trading partner, so this idea that it's a de minimis issue if there is a trade war is completely fallacious. The fact is, both countries are very dependent upon each other, and there's got to be a way of settling that out. Aerospace and technology were the high points for the imports this year. A lot will depend on whether Donald Trump eases up restrictions currently on certain types of technologies that China is willing to buy.
And as we look at some of this foreign trade data, what does that reflect about what's happening in China's overall economy?
Well, it signals a cautious positive. I think the NDRC was correct in saying things are good. I think that's maybe a forebringer of what's going to happen on Monday. I think the numbers will be solid. You're going to see a rebound there. Obviously, this is not the complete picture. Jobs are very, very important, just as well as disposable income, and debt, of course, is out there. Everyone is looking at the real estate bubble and how China is going to handle its SOE issues. So as things go along, expect hopefully better news.
And speaking of those SOEs, those state-owned enterprises, let's look at some of the reforms. What impact are they having, and what more do you think needs to be done?
Well, I mean, it depends on which camp you're on. I think Lee is saying that he would like to see them more engaged in terms of a private sector things, more investment, more accountability, more transparency. I think that's part of it. But there's also has to be a very directed approach that is pushing them in the direction of being more competitive. They are going to continue to be in different industries. Injecting capital is not the issue. It is really getting them focused on being competitive and going outside things. You're starting to see some returns from the Belt and Road Initiative, as has been shown in terms of the uptick in trade. A lot of that will depend on how well a lot of these SOEs can perform in terms of infrastructure building.
And Einar, as we look at some of the comments from the NDRC presser, what are some of the potential risks you think that may lie ahead that we should be watching for?
Well, obviously, I mean, any kind of situation involving the Trump factor is always there. It's very difficult. You're starting to see geopolitical risk creep into the situation. There have been a number of incidents, not only Syria, but this morning, Afghanistan, a very, very large bomb, the largest conventional bomb that the U.S. was used there. You have an armada, U.S. armada, which is just off the North Korean peninsula. And there are issues about how this would affect. Oil is up, dollar is down. So outside the basic economics, we're now looking at a lot more at political risk.
Indeed. Thank you so much, as always, for your insights. Current affairs commentator Einar Tangen.